Okay, I'm going to continue to use this channel as a way of, as something of a journal so I can continue to document my trades and things that I do related to trading. And I want to focus on three mistakes that I made this week. One of which was trade related, which was a management mistake. Another was a process mistake. And the third was a lack of discipline. So I'm going to go over those because I want to clarify and elucidate them and kind of get them out of my mind before Monday comes around. I also have a cold. I've been dealing with, um, well, the symptoms of a cold, so you'll hear I'm thicker than normal in hopefully only one way. Um, okay, so the trade that I took on Thursday, it was a buy of the euro pound. And you can see, I was looking at, just to go over this, let me go down to the 1 hour just to explain. I was looking at this as a corrective move. And on Thursday, when price came down in this motion, there was a very strong reversal. I don't remember what the grounds for it were. There was some news related bounce, I think, and it was very sharp. I would zoom in to show you what I was looking at and what I did to make it clearer. There, if you see that green candle on the right, that is what I bought upon close. So that's a 1 hour candle. Now I bought that with my stop at the low because I've seen this many times before where price will come down, start a correction, move up, and then carry on with a three-wave correction like this. And then on news or at some point, in any case, it will then continue in its trending direction. And in this case, with a strong hourly reversal and the 1 hour print, which appeared to be engulfing to me with the long wick, I took the trade with the stop at the low. Now, it turned around, did not continue up at all, and over the next 2 hours, or maybe even one, over the next 2 hours, it broke through, and I was stopped out. And then what happened overnight, it solidified, went a bit sideways, dipped again, and then there was UK GDP news on Friday morning, which sent it up in the trending direction, which is higher than euro pound. Overall, for the past few years, the euro's been gaining, has been strengthening against the pound. So my mistake here, as I understand it, was was poor management. I did not identify the correct levels for a stop, and I did not give it enough space to move down further for a larger correction. I put too much size on the trade as well. That's a major thing, which made me keep the stop tight. So I should have, correctly trading with the proper assessment, reduce the size and allow the stop to come down to a more appropriate level, because I was working the idea essentially that we have an advance here and a correction against it. And of course, no, of course, that was what I was running. Now, when I was stopped out, I stopped looking at this. I was a bit annoyed for, I don't know, half an hour, 45 minutes maybe, which is a big improvement for me over how I was a year or even a year ago. And I stopped looking at it and I went on to other charts. And I did not look at it again until after the UK news, and I saw how it continued up. Now, if I had been looking, I could have made an assessment of this at the time, and it would have looked bullish based off holding this low there with that little 1 hour candle, but that's not really the point. The point is to deal with the management so that I can get this in order. Now, I should have allowed for more room on this trade with a smaller position size, because the idea was that overall the movement would have been corrective. And so I failed in that respect, and I want to address it because I don't mind taking the relatively small loss on this, and I don't mind missing out on the trade. Both those things will happen again in the future. So I can deal with both of those things quite quickly now and let it kind of brush off of me. But I am annoyed that I failed in managing this in terms of both placing the trade and managing the levels, working out the levels beforehand. Because if I had simply taken a more appropriate size and increased the stop level to a more appropriate level, it only ended up breaking by a small number, about 20 points or so. Not even. So it was a very small break. But that's how it goes. So in the future, I will not over leverage in this respect, and I will balance my stop better to allow it to come down to a more, to give it a bit more room to breathe, basically. Because of course, corrections, movements that look corrective like this, where what I was looking at the time, and I should add that what I was looking at the time looked like this as well. It had a good channel look. You see, as it came down here on that 1 hour where I bought it, it had a clear channel look. So this was all part of my reasoning at the time. And so I thought, okay, break the channel by a bit, forget it. But in any case, in the future, I would give it more space because I don't want to repeat this process, this poor management process, because that is basically the only thing I can control in this. I can set up the parameters, I can control my participation in the market and protect myself for if the market turns against me, but I cannot control what's going to happen otherwise. And what I was saying a moment ago is that sometimes, of course, what looks corrective at the beginning can turn into something more bearish. That happens quite a lot, but that also needs to prove itself because it starts looking corrective. And in this case, it did not fail overall. It simply broke that little trending low, that trend line low that I just drew in. So that is one thing I'm going to correct from now on, the element of the management elements, which I don't usually break, but in this case it was poorly done. My whole week was a bit of a mess, honestly. A lot of lack of discipline, a little bit sick towards the end of it, and a few mistakes. So that's the first one. The second one was Elliott Wave related and my application of it. And this is something I'm going to address so I do not involve myself so much in this type of process in the middle of a move. And I'll explain that in just a moment. So what I was looking at was on the 4 hour of Euro US dollar in this bit trending down sequence here. I was running a count, which I started counting, I can't remember, around this level or so. And I was updating it on Twitter as I went along and breaking down the parts of the trade. I have it open here already. So I had it looking like this. Then we were coming down to wave 3 ending here. And that was all working out fine. It was clear enough. The gyrations, although extending, the 5th wave of that 3rd wave extended there, it was mostly in line. And so I'm like, okay, well, let's see it come up here for wave 4, wave 5, and then we can work the end of the move and then a bigger correction maybe, and then see it continue. So it did come up for a small move here, and the sell-off the next day continued. I thought, okay, well, maybe we have wave 5 into here on this new low, 3, 4, and 5 on a new low. And working this idea, you know, there's always the possibility of an extension, and in the middle of a trending market, I think that the value in assessing an Elliott wave count is minimal and can actually be quite pernicious and harmful and distracting, because what it did to me, and different personality types will not react like this exactly, seeing the idea, or rather having the idea of a wave 5 print in here and looking for a bigger bounce now, it made me miss the data, which was which day was this? It made me rather not react to the price data that was unfolding, because on all these dollar charts there was a bit of a burst up and there was weakness coming into it, which was clearer on cable than this, but in any case it was visible on both. And for me, I was distracted by the count. Now other people may be able to handle it. I think it's partly a matter of knowing who you are, what type of personality you have, and things related to that. For me, I am not an analytical person. I don't have any type of intelligence in that regard, or any type of like particular intelligence in that respect for sure. And I'm more of an intuitive person who runs on emotion, on certain emotions anyway. And this type of counting mid-process with all the excess data just messes up my mind, inputs too many possibilities and distractions, and muddles me up. It kind of like prevents me from looking at the data where I can form an intuition in a way off of the data and like see what kind of movement, what kind of patterns emerging from the information. So that is something I'm not going to do anymore. I'm not going to run Elliott wave counts in the middle of the motion. Now they have a very good function in that, like you see, like the start of a move, and then you have what would be called a three-wave correction, and then you can take off on the break of that low, right? There's a good way, there's a good understanding, there's a good use for Elliott wave. Where it starts to become harmful, in my opinion, is the mid-motion wave, because it starts to put, well, it doesn't start to put, it starts to influence you in all kinds of like limits and possibilities when the market can easily unfold further and further and elongate and extend or truncate perhaps, and all kinds of other information which kind of comes in more on the price data. So I'm going to drop the Elliott wave counting in mid-motion because it just muddles my mind. So that is something I'm going to get out of, because I've noticed before, this is not the first time it's happened to me, in that I've missed the live information in the price because of because Elliott wave, with Elliott wave, you're always putting your interpretation onto the market. And for me, this doesn't work very well. I get too distracted by it, and there's too much of a self-involved. All my best trades ever for the past 10 years have come off of intuition, off of reacting to data, not even understanding it, maybe not being able to articulate it, but getting the gist of it. And that doesn't work so well when I try to become analytical as such. So Elliott wave in live counting is out the window, and I'm just going to minimize it to basic patterns related to that. And the third thing was not chart related. It was just a general lack of discipline in that I did not follow a proper routine. I simply, when I wasn't feeling well, I got up, I didn't prepare for the day, I didn't shower, I just reacted like a slob, came to the computer and just put all my filth in front of it and didn't get anything done. So that is an element that doesn't benefit me, because I need something of a routine. I need that stability when I'm trying to deal with something that's rather volatile and temperamental like this. So that is something I'm not going to allow myself to do again. Even if I'm feeling sick, I either have to walk away from this process, or if I want to be a part of it, I have to take the steps to join into it. And that requires all the elements of discipline. Whatever you do, what I do, I have to prepare in the morning, have a shower, have some exercise to some extent, and do a bit of preparatory work extended from the night before to see what price actions unfolded overnight and to get into the zone. So that was a lack of discipline on my part, and that I just say that tends to extend over into trading. You come to the computer, you're not properly focused, you haven't done the work, either the chart preparation before or some other off-screen preparation, and I think it sets you in not exactly a negative mood, but a kind of slovenly mood. You're a bit loose with your behavior, then you're a bit loose with your analysis, then you're a bit loose with your management, and it kind of trickles down and onward. So those three things together are things that I'm going to address to be stricter with the management and not be so gung-ho about it. To simplify the process so I don't actually obscure price data by counting and imposing myself in the middle of the market, and to just cut out the nonsense discipline, which when I feel better I don't do anyway, but that's it. You also have to judge yourself when you're feeling like shit. Another thing I'm going to alter, which is not really a point, but I get a lot of false signals, so I'm going to alter my use of stochastics because they have a function as well. I might even adjust the parameters on the stochastics, but I'm going to alter my use of them because I find that although they are very good for divergence and inserting corrections when they reset to a level, sometimes they get in the way of my own analysis too. So I went through a period many years ago where I traded without an indicator. The whole bareback way of trading, just off price data, like very pure. I don't even think I think I didn't even have a moving average on, I can't remember. But I'm going to have to figure out a way to alter my use of the stochastics and to incorporate them only for at certain divergent times, which I think would need to line up with other parameters like structural parameters, structural patterns, and or in corrections when they reset to 80 or 20 to allow the trend to continue. So I'm going to work that out tomorrow probably, and I'm going to put a bit of a limit on them because I find I do it best when I can look at the data, get a sense of the meaning of the price movement, and intuit the pattern that's unforming and the trade that is setting up. So that's what I'm going to work on. So I don't know if that's interesting for anyone, if anyone made it to the end of this, but that's my reaction to what's been happening, what I did this week. And so my adjustments will be starting on Monday. Okay, have a nice weekend.